For more than 50 years, global oil trade has been dominated by one currency, the United States dollar. This system is known as the petrodollar system. It has shaped global finance, energy markets, and international trade for decades. But today, new geopolitical tensions may be challenging that system. The petrodollar system emerged in the 1970s when oil-producing nations began pricing oil exports in US dollars and investing those revenues back into US financial markets. As a result, around 80% of global oil trade is still priced in US dollars today. This system strengthened the global dominance of the American currency. But Iran has been operating under heavy US sanctions for years. These sanctions restrict Iranian access to the global dollar-based financial system. To bypass these restrictions, Tehran has been developing alternative payment mechanisms for its oil exports. China is now the largest buyer of Iranian oil. To maintain this trade, China and Iran have developed systems that avoid the US dollar and instead use Chinese yuan or barter-style arrangements. This strategy allows both countries to bypass Western financial sanctions. China has also launched yuan-denominated oil futures markets to encourage oil trading in its own currency. Some analysts call this system the Petroyuan. If adopted widely, it could challenge the dominance of the petrodollar in global energy markets. But behind the geopolitics lies a major corporate law battlefield. Energy companies and banks must navigate complex legal risks. These include sanctions compliance, trade finance restrictions, cross-border payment systems, and energy supply contracts. Failure to comply can expose companies to massive regulatory penalties and international litigation. The United States has imposed multiple sanctions targeting companies involved in Iranian oil trade. Firms facilitating these transactions risk losing access to the US financial system. This creates enormous legal and compliance risks for multinational corporations. At the same time, some countries are exploring energy trade in alternative currencies. Russia, Iran, and China are already experimenting with non-dollar oil transactions. Nearly 20% of global crude trade now takes place in other currencies. Whether the petrodollar system will truly weaken remains uncertain. The US dollar still dominates global finance. But the emergence of alternative payment systems suggests that the global energy market may slowly evolve into a multi-currency system. Energy, geopolitics, and corporate law are now deeply interconnected. The battle over oil trade is about currency power and the future of global markets. You are watching Corporate World.